Namaste, everyone. Thank you so much for joining us of our second session of the Member Benefit Event Series of the Canadian Hindu Chamber of Commerce. My name is Kushagar Sharma. I am the Vice President of the Canadian Hindu Chamber of Commerce, and it's a pleasure to be with everyone. I have the pleasure of introducing our MC for the event, Ms. Kavita Menon. Kavita Menon is our life member and also a director. She's very actively involved in the organization and has been with us since the start. She's been the MC to some of our biggest events, the Dhanteras Gala, if you remember from last year. It's a pleasure to have Kavita with us, and I'm going to pass it on to Kavita ji, who will be the MC for today's event.
Namaste, everyone, and thank you, Kushagarji, for that wonderful introduction. I know it is a Friday, and we are eagerly waiting to learn about the Canadian international trade from the exponent himself, from the financial sector. But before we get into that, I would like to introduce another special person who has joined us, who is Mr. Inderjit Chatterjee. He will speak about the Vedic math and how his not-for-profit organization is contributing to the community. It's important for us to kind of learn about the Vedic math, and we'll certainly be organizing more sessions in the future about Vedic math. So without further delay, let me introduce Mr. Inderjit Chatterjee to all of us, and please educate us about your organization and let us know more about the activities that you do in the GT.
Namaste, everyone. Thank you so much, Kavita ji. Thank you so much for the great introduction. Kushagar ji, thank you for this opportunity. This is a non-profit that my wife and I started. It's called excelsteam.org. As part of that, we are essentially promoting STEAM. Everyone knows it's science, technology, arts, mathematics, engineering, and we primarily have events based on those. As part of the STEAM and the events, when we take a look at it, you can take a look at our website. We have hosted some events, and there is a one that's is going to come up actually in a few weeks from now. Is going to be a Lego Space Challenge. So that's more on the Excel STEAM side of it, and affiliated with Excel STEAM. Also, it's on the mathematics side of it. I'll be teaching Vedic mathematics to the kids and to the elementary, to the middle school, and to the high school, and anyone who is interested. So without further delay, let me just talk about why do we need Vedic maths? Because you walk in and you can go to any of the school today, you know that they can well use calculators, right? So in their exams and everything, they're using calculators. So the question comes in that why even bother about it, right? So I'd like to give some backdrop as to where we are all coming from. We are coming from the Indian subcontinent, right? So which was actually where the mathematics, some of the very important fundamentals and key mathematics principles started. We all take great pride in it, and we also take great pride in what we learned from there. Vedic mathematics, what it does is that it really enhances your computational powers. So if I don't know how many of you have watched Shakuntala Devi. So she used to be she was a computational genius. There's been a movie made about her, but if you don't want to watch the movie, just watch some of the YouTube, some of the videos related to her, and you will find that she's able to do all these mathematical computations on the fly. And we considered her as a human computer. So what it does is that it teaches us computation in a fun way. And it is meant that when the kids learn about it, it also boosts their confidence. So there are many of us who love maths, but they stumble across the big multiplications and divisions and addition and subtractions, and they get scared about it. So this is, in a way, it motivates them, and also it enhances their prowess. So if you get a good mathematical capabilities, it always helps you. It doesn't matter which field you go in, you can, right at the top, if you are able to do the calculations on your head, it actually not just boosts your confidence, it shows it not just it's not just to impress anyone, right? But it's to impress or, develop your own skill set. And it helps down the road in many different ways, but not just competition, but in mathematical skills and abilities. So considering all that, that's why I'm teaching this. When I started, like I come from India. In my education, we were never taught Vedic mathematics. I really don't know why, but I can see that there are true benefits to learn about it. And as such, the concept is to get it out to the kids so that they can use it, learn it, and enhance their skills. So where this all starts, I will give you now next, I'm going to give a little bit of a history, and then I'll give you some examples, and then I'm going to talk a bit about the classes, and then I'll open it up for any Q&A if you have, okay? So the history is really that this all started with a sage, we should all be thankful to. It's Bhartiya Krishna Tirth Ji, who actually, like, a Shankaracharya from Puri, and he came up with these treatises on mathematics. Number systems is very complex, so it's not something as of a typical maths. He found a way to do this computation in a very non-traditional way. So the beauty of it is to first to understand it, and if you are more interested, you can learn about how the proofs are, because this is nothing like a black magic. It is purely embedded in the mathematical principles and how it's done. And if you learn more about it, it's just going to enrich your fundamentals, right? So that's a bit about the history. And I'm part of the Vedic Math International Organization, and my learnings are actually from there. So what I'll be teaching it to the kids are going to be based on the education from there. And the classes will be starting at the Hindu Heritage Center starting this fall, and you will know more about it in the times to come. I think in one of the future events, I will also come in and talk a little bit more in depth. So, I'll look forward to it. Just to give some examples, I think I'll probably save it for the future sessions. But, let's say that if you try to multiply or anything that ends with 5, right? So I'll give you an example. I'm not trying to impress you. I'll just give you an example, and just one example, and just to show that how it helps. So let's say that you want to do it 85 square, right? So instead of a traditional way of doing it, I can just give the number that it is 7225. It's and 65 into 65, or you take any of those kind of computation, 25 into 25, you can just come across it. It's just the way that we do it. I can its principle is to apply a certain addition, and in this case, what we are doing is that we are incrementing the unit place, multiplying it with the unit, and then adding 25 at the end. Okay, I really don't want to go too much into details because I'll do that in a separate forum. But just to provide some illustration that it really helps you with the calculation. You can give me any even number and ask me to multiply it by 5. I can do it, in a matter, like when you get the number, in a matter of couple of seconds. Okay, so I'll open that up. If anyone is interested, we can do that. So about the classes and all, it will start in fall. We will have different groups. We'll be running with it. And actually, that's about it. If you have any questions, please let me know.
Thank you so much, Indrajit ji. I will have a quick question. Do you accept adult kids? Because
Yeah, absolutely. So, this will be open to anyone from grade 3 onwards to grade 12. And anyone as an adult, they want to do it for sure. I learned Vedic math myself as an adult. So anyone can benefit, anyone can do. We will just be segregating the class according to the age group, just so that, it kind of meets the needs.
Okay, thank you so much. I think I need to freshen up my fundamentals with you. I'm looking forward to attending your session. without further delay, let us introduce our special guest today, Mr. Vipin Sharma ji. Before that, I was just thinking about all the good things which is happening in the international trade sector. In 2021, India was Canada's sixth largest merchandise trading partner in the Indo-Pacific region, the 13th largest merchandise trading partner globally, and 14th largest destination for merchandise exports. When it comes to the trade, we know we are doing really well these days, and it's kind of great whenever we get to hear from the High Commissioner officers and the Consulate General officers, the way they give all the updates, right? It makes us feel so good, and patriotism kind of like reaches on the top. That is the reality. So it's always good to know more about all the all the tools which are available for us in the banking sector. As we know, we are in Canada. We are so blessed that we are in Canada, and Canada's financial system is one of the safest and strongest in the world. And maybe this is due to the financial sector policy, regulation, and supervision. So I'm sure that Vipin Sharma ji will be certainly able to throw us more light on these topics by educating us more so that we can be good business people. So let me talk a few words about Mr. Vipin Sharma ji for those who doesn't know him in person. Vipin Sharma is the Director for Global Banking Strategy at the RBC. He is the former Senior Trade Finance Specialist at RBC and former Vice President, Treasury Sales at HSBC and Regional Head for RBL Bank. So he has a wide variety of experiences in the banking sector. So whatever question you have, don't hesitate to jot it down so that we can ask him at the end of the session. Warm welcome, Vipin ji. It's a Friday still. You managed to find time to educate us, and it's our pleasure to have you on board. Thank you.
Thank you, Kavita ji, and thank you, Kushagar, for inviting me over. Namaste, everyone. It's a pleasure to be here, and I'm glad I'm able to share some of the knowledge that I've acquired over these years. I'm still going to keep it very basic because I don't know the background of all the people over here, so I'll start with very basics of international trade and how basically the banking sector helps businesses do international trade, right? So let me share the presentation that I have. Well, I'm not seeing it for some reason. Sorry, just give me a second. Yes, let's share the entire screen, I guess. Can you see the presentation now?
Yes, we can see it. Yeah.
Okay, perfect.
You can maximize it, or I think
I'll just put it in the presentation mode.
Oh, yeah, that'll be good.
Yeah.
Yeah, this is good now. Yeah, thank you.
Oh, perfect. Okay. Yeah, so we will talk about international trade, and I'll keep it more from perspective of Canadian businesses, but happy to take any questions if you have beyond whatever is covered as part of presentation as well. And Kavita ji shared my background, so I've spent close to 15 years now in banking industry, and most of my experience has been working with those international banking clients. So I've covered foreign exchange related instruments in the past, and then spent some time with international trade finance. And currently I'm global banking strategy director and help, again, my clients access banking services overseas. So anything to do with international banking, please feel free to bounce your questions and I'll be happy to answer those. Okay, so when we talk about international trade, essentially there is a trade happening whenever there is exchange of goods or services. And when it is happening internationally, it's part of international trade world. A lot of people confuse international with trade with the fact that whenever the goods are crossing borders, only then there is international trade. But the trade encompasses services, intellectual property, and electronic transactions. So it's much wider than what we typically think of. And yeah, it's pretty much present everywhere. Any businesses that you are probably involved with are somehow related to international trade. Companies are trading whenever they are selling services to foreign markets, are contributing to global supply chain, and even like if you hire global talent for your company, essentially there is a exchange of services, right? There is a softwares being created in different countries and they're bought over in different places. So there is international trade component there as well. Okay, and the reason trade is so important, and the Canadian government and they have put in so many resources behind promoting international trade is, and the statistics mentioned on this on the slide are primarily coming from research conducted by Export Development Canada, and those who do not know about EDC or Export Development Canada, it is basically a crown corporation which is essentially owned by government, and it is responsible for promoting exports out of Canada. So based on this research, they see that export-oriented businesses end up generating twice the revenue that a non-exporter would typically generate. So it's very evident that they generate more money and they contribute more to the economy as such. The productivity increases because they have, again, which is linked to the last point as well, they have to be very adaptable, and they have to innovate, and they are generally twice as innovative as the non-exporting companies. And this comes from the fact that when you're dealing internationally, you have to be much more competitive because you are competing against the companies which are global in nature, or like if you're going into a market like US, there are almost every company across the globe wants to sell their products in US, and so you have to be very competitive there. So the companies who are export oriented or who want to trade internationally, they are more adaptable. They end up diversifying their customer base. Obviously, Canada and the US market is at least 10 times as large as the Canadian market. And you can just project it further onto countries like India, China, and obviously the customer base is much larger. They end up mitigating market risk. So if there is a recessionary pressure in one of the economies or one of the countries, the companies which are diversified in nature, which are selling or doing business with multiple countries, they are likely to survive better than most other companies which are concentrating in only their home markets. And sorry, Kavitaji, before I move forward, just in case any question pops up, since I am on full screen mode, I can't see those. If you see anything, just please stop me and you can maybe ask me to respond to anything that comes up.
Sure.
Okay. All right. So let's move forward. So when we talk about international trade, there are a lot of risks involved, which kind of at times businesses get really worried with, and they see it as a deterrent to doing business internationally. So essentially, where banks come into play and what banks can do for international trade is they can help you view risk as a challenge, but not as a deterrent. So essentially, risks can be classified in 4 broad categories when it comes to international trade. The first and foremost, which is very apparent, is foreign exchange risk. The foreign currency, and you see that with Canadian dollar trading against US dollar directly, the currency rates move so much at times, so you are always exposed to foreign exchange risk. You sold some product for 100,000 US dollar, which was worth 135,000 Canadian one day, but by the time you realize your payment, maybe they are worth only 125 if Canadian dollar ended up appreciating. So all those kind of risks kind of come into play because of the foreign exchange involvement in international trade. The second and third are probably the most critical ones because they expose you to a very significant amount. With a foreign exchange risk, you end up losing a percentage of what you're selling or what your revenues would be. Payment and performance can essentially, like, it can be a much larger hit. So payment risk essentially comes from the fact that if you're selling internationally and you end up not getting paid at the end of the transaction, then yes, you are in trouble. Or even if you end up getting paid and they paid you lesser money, or they ended up paying much later than when they were expected to pay you, then you are exposed to a significant risk on the payment side. Performance risk, you can reverse the sides now. So let's say you are buying products and you ended up paying certain amount to a company overseas, and then you are expecting them to perform up to particular standards or ship the goods out in particular time frame, and they did not do that. So you are exposed to that performance risk. This was very common, and since it's very recent, you can probably relate to it during COVID. Like there were huge pressures, especially when it came to medical supplies, masks, and PPE kits. When there were significant performance risks in the market, people were making advance payments to a lot of suppliers, and they were not receiving the products either. Or even if they were receiving those, they were faulty goods, they were not up to standards. So that's a very significant risk when it comes to international trade. And the fourth is one is a little technical, and which is a documentary risk. So trade is essentially happening through documents. There are a lot of documents which get exchanged, which gives you possession of your goods or services, and they can be different kind of documents in different countries. So legally, you can be in trouble if you are not considering those risks properly in your business. So it's a very relevant and very important risk type. So in the course of next few slides, I'll be talking about the last three. The first one I've kept out of this presentation today because it can be a very elaborate discussion on its own, and there are a lot of products that we can get into. So I kept that out of today's session, but happy to take any questions on that one too. But let's talk about the remaining three. So as we understood the risks involved in international trade, we will basically talk about three broad instruments, which are together called trade instruments, which is a guarantee or a standby letter of credit. The second is letter of credit, and third is a documentary collections transaction. Those are basically the broad categories of trade instruments that can help you safeguard your interests when you are trading internationally. So just to understand what it means, let's consider two extremes on this slide. So on one side, you see cash in advance as a transaction type, and on the other end, you see open account. So essentially what cash in advance does is, and again, very prevalent during COVID times, cash in advance is when an importer is essentially paying money in advance to receive goods at some point later, right? So it was happening. There were manufacturers who were demanding almost 100% advance payment to supply masks, PPE kits, and all those kind of things. So the importer was basically importers in Canadian markets. They were paying 100% cash in advance to, even if it was not 100%, let's say 50% cash in advance, and then they were waiting for goods. So goods ended up either never coming here, or if they came, they were faulty goods, right? So it's in this category, importer is taking 100% of the risk in a transaction, while exporter or the seller is taking zero risk in the transaction. On the other extreme, you see an open account transaction. And this is a very common way of doing business, especially between Canadian and US businesses. Historically, Canada and US have been very close trading partners, and there has been a considerable goodwill and trust between the counterparties in these two countries. So what that meant for businesses was that businesses was just producing goods or services, and they were just shipping those goods out to the buyer, and then they were waiting on payment, which would typically come in 30 days, 60 days, 90 days based on their contractual terms. So it was very common way of doing businesses, and that's the reason there is a gap in Canadian market typically when it comes to understanding of trade instruments. A lot of Canadian companies have never used trade instruments, which is very much in contrast to what you would typically see in a place like, let's say, India or most of the Asian countries. Trade is literally like just a way of doing business, right? Even domestically in India, a lot of companies would do business with other businesses only on letter of credit, which is something a Canadian business would have never heard of. So there is, and this has been traditionally due to the reason that they have had such high trust factor between the companies that they never used banks to do these transactions. But as the the economies have opened up and a lot more trade has started happening, Canadian businesses started getting exposed to these risks when they realized that they can't trust businesses blindly and they have to safeguard their own interests when it comes to international trade. Uh, in an open account transaction, it's exactly reverse of cash in advance. Basically, exporter is taking 100% risk because the exporter is basically creating goods or manufacturing goods and shipping them out, and then waiting for buyer or importer to pay up. So if the buyer pays late or buyer doesn't pay, then they are exposed to 100% risk on that transaction. So that is where trade instruments come into play. So there are three categories: a bank guarantee, which is more in favor, typically more in favor of exporter. Again, it can be written in various different forms, so it can be adjusted. But typically, a guarantee in a transaction would be more favored by an exporter, followed by a letter of credit, which is kind of right in the middle, which has sort of benefits for both the parties. And documentary collections, again, is slightly more in favor of a buyer rather than exporter. And we'll talk about these in the subsequent slides. Okay, so let's start with what a letter of credit instrument does. And you would have probably heard the term LC. LC is a very common lingo used within the market. A lot of people still confuse LC with a guarantee, but LC is essentially a conditional undertaking, and it is used extensively in international trade, and in some countries, as I mentioned, in places like India, even domestically. So let's take this example where a client based in, or a company based in Canada is essentially exporting lumber to China. The Chinese buyer will instruct their bank to issue a letter of credit in favor of the exporter in Canada through ABC Bank, which is the exporter's bank. Payment is guaranteed, and this is what a letter of credit does. The payment is guaranteed if the exporter ships the goods on time and is able to provide those shipping documents compliant with the conditions outlined in LC. So LC document essentially is exchanged between the banks, and the importer bank essentially specifies a list of documents on LC and says that if you provide me these, let's say 10 documents within a particular time frame in a particular format, then I am guaranteeing you a payment on a particular date, right? So let's see the flow of goods and documents in this transaction. So let's look at the parties first. So there is importer, then there is importer's bank, there is an exporter, and there is exporter's bank. So the first step in any transaction would be typically the signing of contract between the exporter and the importer. They sign and they agree on terms and how the goods will be shipped, how what time frame it will be manufactured in, and when will the exporter be paid on that. Based on this contract, importer approaches their bank with an LC application, and the LC is issued by importer's bank and goes from importer's bank to exporter's bank. The exporter's bank basically acts as an advisor to exporter and advises the LC to the exporting company, saying, here is an LC for you. Whenever you are ready with the documents, please hand over those documents to us, and we will pass them over to importer's bank for your payment. Right? So now the next step is the manufacturer produces the goods, or in this case, basically arranges that lumber and ship those goods out to importer. Once the goods are shipped out, they will collect all the documents which are mentioned on that letter of credit. The most important document, and that's why they are waiting for the shipment to happen, would typically be a bill of lading in any transaction. Bill of lading is essentially a document which gives the right to importer, gives importer the right to collect those goods, basically, when they have that, original document in hand. And that document will typically be a part of those documents in LC. So once the documents are prepared, they are presented to exporters bank. The exporters bank will basically check everything and send those documents to importers bank and ask for payment. Once the importers bank receives the documents, they will check everything. They will release the documents to importer so that importer can go to the shipping yard and basically collect their goods. At the same time, they will make a payment to exporters bank. And that is how the transaction will basically get closed. Now, how this transaction is helping the businesses is, in this case, the first thing is importer is not paying anything upfront. That is the best part of it. So importer is not exposed to that risk of paying in advance and not basically receiving goods. How exporter is safeguarded is that because there is a letter of credit, exporter is safeguarded even if at some point in time importer decides that I do not want those goods anymore. So let's say they issued a letter of credit, but within those 30, 60 days when exporter was still manufacturing those goods, importer either goes bankrupt for whatever reasons, or importer basically gets those goods from elsewhere. And now they decide that they do not want to buy those goods. But exporter has started manufacturing goods and they have spent a lot of money on that. So what will happen is once the exporter ships the goods and produces those documents to the bank, then even if the importer doesn't want the goods, they will still have to pay. Essentially, it's importer's bank which is paying, right? So importer's bank's guarantee on that, which is a conditional undertaking, that in case you give us documents, we will make the payment. That is what is safeguarding an exporter. So essentially what is happening is exporter's risk is now not on the importer, but on importer's bank instead. The only time an exporter will not get paid in an LC is if they do not meet the conditions of LC. And if they meet conditions of LC, the only reason why an importer or why an exporter will not be paid is if the bank fails for some reason. The importer's bank fails and they just do not have money to pay, which is extremely unlikely to happen. But yeah, if that happens, then yes, then they are in trouble. So this is how a transaction would safeguard both the parties in this scenario. Now
there are some questions.
Let's take them first. Yeah.
Okay. Ranga Narapuram has asked, do Canadian banks act as escrow when dealing with the foreign countries, say China or Far East? This can help significantly. That is the question.
Sorry, let me read.
Yeah, that's fine. Yeah.
Do Canadian banks act as escrow when dealing with foreign countries, such as this can help significantly? Yeah, so it's not essentially, it's not essentially an escrow with foreign countries, but yes, we can or the banks can basically facilitate trade with China essentially through something like what I just described, an LC, right? You issue an LC, so you're safeguarded in that sense. So I don't know if that is what you were trying to ask, but yes, the banks can basically help. And if I go to the next one, Parveenji, how does our BC secure performance risk for product quality? Okay, that's a very good question, Parveenji. And how it helps, basically, as I mentioned, under a letter of credit, you can always specify the list of documents that need to be produced when you accept the goods, right? Or accept the documents. So banks unfortunately cannot check the goods. Banks have no control over goods. Banks will only check the documents, okay? So how banks can support is, we generally ask our clients to include a quality certification from a third party as a list of essential documents within an LC. So in the same transaction that I was describing about, let's say COVID supplies, what started happening was there are a lot of third-party certification agencies, like Intertech is one, SSD is one. So what they do is they certify those goods in the foreign country, and then the exporter basically has to attach that original certificate included in those lists of documents. And only if that quality certificate is issued, then only you pay. Otherwise, you don't have to pay. Right? So that is how the performance risk can be tackled in this case.
Thank you. I think we can continue with the presentation.
Let me go back. Okay, so let's go to guarantees now. So guarantees is one product which is used most extensively within Canadian market because this product is used locally as well. A lot of cities or municipalities ask for different kind of bank guarantees or standby letters of credit when they want to grant you a project. So let's say somebody buys a gas station. Even for gas stations, you have to typically submit a bank guarantee, right? So that you are making payments in time, or it can be to city to let's say there is a construction project and the construction manager or the project company basically has to submit a guarantee to city saying we would not damage anything around the project, right? Or if you damage something, then you basically rectify that, right? So the guarantees can be two types. One is a financial and other one is a performance guarantee. So financial guarantee is essentially when the bank is basically guaranteeing a financial or a payment default. So a very crude or very simple example on this one would be a lease payment. So let's say you are leasing your apartment or your house to a tenant. So you ask the tenant for a financial guarantee, saying that in case you are not able to pay the rent, then your bank will pay it, basically, right? So that would be a typical case of a financial guarantee. Similarly, you can take it to an international trade transaction. Basically, an importer is saying, okay, I guarantee you a payment, and that's it, right? So in case the importer is not able to pay, then bank will have to pay, essentially. Uh, Performance risk or the performance guarantees is the kind of guarantee what I just described earlier in case of, let's say, a construction project where a contractor has to submit a guarantee saying in case there is a damage, either they will basically rectify it or their bank will have to pay. So in this case, again, there is a money involved, but the reason for default is performance, basically, right? So in case there is a performance gap, then there is a default. And let's see with the examples how typically guarantees would be used. Guarantees are more prevalent in project scenarios, and I will take those kind of contractual situations. So typical project timeline, there would typically be an offer, which is basically floated, saying that, okay, we are inviting bids for completing this particular work. And then there is a tender process. Once the tender process is completed, there is a contract signed between the organization which is offering the contract and the person who ends up winning the contract. Then there is typically an advance payment made to the contractor. After that, there is performance or delivery of the project. And even after that, there is generally a money withheld, which is called retention money, which is paid only after the successful running of that project for a particular amount of time, right? So let's see how basically the contractor can utilize different guarantees at different stages of this commercial event. So when there is an offer and there is basically a bidding for any project, the organization, or especially the cities, they would typically ask the bidders to submit a bid bond or a bidding guarantee. So essentially what this bond or what this guarantee does is it basically guarantees that in case the bidder ends up winning the bid and they want to back out, then they cannot, right? In that case, they will have to pay a certain amount of money. So the tender floating organization is basically sure that if somebody wins the contract, they will not back out, later realizing that they offer terms which are not suitable to them. Once the tender is won and the contract is signed, then basically there is an advance payment guarantee or advance payment bond, which the contractor can submit so that they get an advance payment, right? Again, the typical use case would be, let's say, a power plant, which let's say government somewhere in Caribbean island, there is a power plant project. A Canadian company ended up winning that contract. Now the government in that Caribbean country, they want to pass that advance payment only after you submit an advance payment guarantee, saying that once I receive this advance payment, I will start work within so and so timeline. That is what the advance payment bond will do. So once advance payment bond is submitted, advance payment is made, and then the project performance starts, right? At that time, generally the advance payment bond is replaced with a performance bond or a performance guarantee. Basically, again, saying the same thing, that we will complete this project within a particular time frame. Right? Once the project is completed, then the company, just to get the entire money released, they can submit a retention guarantee, retention bond from their bank, saying that, okay, this project will run successfully for 4 or 5 years or whatever the time frame is, and you can release the retention money to us. But just in case there is any issue with the running of that power plant, let's say, then we will come and rectify it, or you can call for this retention money from us. You can get it back because there is a bank guarantee attached to it. So that's typically how a bank guarantee will help in any contractual situation, be it globally, be it locally as well. Now let's move on to the last one. Kavita ji, you can nudge me in case I'm running behind schedule a lot. But okay, let's move on to documentary collection transaction. Again, let's take the same scenario that we discussed earlier under a letter of credit. A documentary collection transaction, again, the parties will remain same. In this case, let's say the scenario is when there is a contract between the two parties, but there is a little bit of trust between both importer and exporter. And the importer basically says, okay, I will pay you 20% advance so that you can start producing goods or start shipping those goods. And rest, I will pay you once you give me the documents. Okay. In this case, the importer is basically signing the contract first, but then it directly goes to the shipment event. In this case, there is no letter of credit. So basically, the bank is not guaranteeing any payment in this case. And I'll explain what the bank's role in this is. In this case, okay, after signing of contract, there is directly shipping of goods. There is nothing in between. Okay. Once the goods are shipped, again, the same set of documents, which we discussed earlier, and it can be like fewer documents or maybe more documents, but the documents are basically sent by exporter to their bank. The bank will then send that same set of documents to importer's bank with a letter saying that please release these documents to importer only when they release this 80% payment. Okay. So what importer's bank will do is basically they will send a notice to importer saying that we have these documents for you. In case you want to accept those, please pay 80% of the money and then you can have those documents. Okay. So in the happy path or in the best case scenario, basically the importer will make the payment. The importer's bank will release them the documents. The transfer is paid, the payment is transferred back to exporter and the transaction is closed. Okay. So now let's see how it is different from a letter of credit and how it's slightly riskier for an exporter. Okay. So under a letter of credit, the good thing and the greatest thing that we learned was that exporter was 100% sure of getting paid in case they shipped the goods within time and they produced all the documents as per LC. Okay. In that case, even if importer went bankrupt or if importer did not want to accept goods, they still had to pay. Now that is the only issue with documentary collection. Okay. So under a documentary collection, the good thing is that the documents are released to importer only after a payment is made. Okay. So in case the importer says, okay, I do not want to accept the goods anymore because I arranged it from elsewhere. In that case, importer is not liable to pay anything. They can just refuse the documents. The good thing for exporter though is that at least the documents are still with exporter or at least with their bank, and they can find an alternate buyer for those goods, right? So since the goods have already gone to China in this case, the exporter in worst case scenario, what they will do is they will go to the market and say, okay, we have these goods which are already in China. Does anybody want to buy them? And they can offer certain discount on those because now they have received 20% advance already, right? Because importer paid 20% advance to them. So they can discount it by, let's say 10, 20% and still be fine, right? So that is why under a documentary collection, typically the exporter would expect certain payment in advance. But still, it can be risky, especially if you consider something like a perishable goods. Let's say there are vegetables or fruits on that ship, and you are trying to find an alternate buyer, it can take a long time, and by that time the goods can go waste, right? So that's a big risk in a documentary collection transaction, and that's why an LC is slightly better. The reason people still choose documentary collection is because it's cheaper way of doing business. Under a letter of credit, there is generally higher expenses involved. Plus, the importer would typically need a credit line with the bank, because that is the only way they can issue that guarantee on behalf of the importer. Okay, so the last slide, and then I'll stop. I just wanted to leave you with certain good resources that you can use. Obviously we talked about trade products, and RBC does all of these, which are letters of credit, guarantees, doc collection. We also do discounting, and I'm not getting into that, but yeah, so there are other products that RBC offers. But the main thing that I wanted to leave this forum with was the middle portion, which is RBC Global Connect and Trade Club. So RBC Global Connect, and you can just Google it, just put RBC Global Connect and you will reach the resource that I'm talking about. This is a free online tool, okay? Just go and sign up. So what this does is, this gives you a lot of information about any market across the globe. So just search for, let's say you want to sell, let's say lumber in India, just put that product, put that country, and you will get whole lot of information. You will get all the historical volumes of what kind of trade happens between India and Canada for that particular product, right? What has been the history? What are the other alternate options for Indian businesses when they want to buy lumber, let's say globally? So it's a wonderful resource. It provides you with a lot of useful information related to counterparties, related to trade shows that are happening in that particular country about a particular market. So completely free, just go and explore it. The second component of the same tool is called Trade Club. That unfortunately is a closed portal, which is available only to RBC's credit-worthy customers. So, okay, so again, Trade Club can be accessed only with a certain level of credit history with RBC. That is how I would put it. Because what Trade Club does is, essentially it helps you connect with buyers and suppliers globally. It's sort of a LinkedIn in a way. It's a LinkedIn which is available to only certain bank customers. So RBC is the only Canadian partner in that particular club. And similarly, you have Bank of China, you have multiple other banks across the globe. And basically you see each other, and you know that the other counterparty which is available on Trade Club is the credit-worthy customer of a particular bank. So you start the relationship or the dealings with a lot more trust with that counterparty. So wonderful resource, again, explore. At least RBC Global Connect, you can explore for free, and that itself is huge value. I would say highly recommended to anyone, anybody interested in international trade. The last one is, again, you would have to be an RBC customer for that, but RBC basically partners with EDC, which I mentioned earlier, which is Export Development Canada, and has a lending program called Trade Expansion Lending Program, which is dedicated to exporters specifically. And in case a lot of companies do not have collateral at times, right? They do not, let's say they do not have office premises or a large office space, which they can put as a security to the bank to get some lending facilities. In those cases, this can be very helpful, because EDC comes into play and says, okay, we will guarantee RBC 75% of your lending facility, so that RBC can grant you that loan easily. So very interesting program, and happy to chat more in case anybody wants more information on this or anything else. Now I'll just stop there. I think we are way over time, so I'll just stop there.
There are like few questions, but before we get into that, I'm quite curious to know about the AI which has been incorporated in the financial industry. It's digital transformation is something which is really significant in the business, right? And in order to get that fast and experience for the customers, what are the other tools that we have in place? Because all those tools which you explained is more of traditional ones. So in next 5 years, what are the changes that we can expect with the incorporation of this AI sort of tools?
Yeah, again, a great question. So, even on the way the trade works, there are a lot of things that are happening which will basically help digitize the entire trade transaction. Right now, a lot of documentation is flowing through couriers. So a lot of it can be digitized, right? A lot of it can actually move over blockchain. A lot of transactions actually started happening already. Canada is way behind when it comes to innovation in international trade. Most of it happens in Asian markets and Dubai. So it's Dubai, Singapore, Hong Kong. Those are traditionally the markets where most of the innovation comes from. And banks like HSBC, Standard Chartered, they have already started experimenting with blockchain and blockchain-based transactions on international trade. So essentially, you do not have to send anything through courier. A transaction can be tracked at any time, and you can use IoT to basically keep track of your goods as well. So a lot of different technologies coming together and making it a very seamless experience for businesses to trade, but it's still very nascent. But as you said, next 5 years, you never know what will come up. But yes, there are a lot of innovations happening around this space.
Mm-hmm. And we as an agency, right, we always get questions from people from India and other countries that they like to establish a startup business in Canada with our support. This is a question which we all get on a regular basis. So what are the tools which are available? So for those who are interested in starting like a startup business, what are the tools which RBC can offer for those people who are interested?
Okay, unfortunately, I don't deal with that part of the business, Kavita, but I do know for sure there is an RBC Ventures company, and I'm just forgetting that name right now. So, okay, let me tell you a bit about RBC Ventures. So, RBC Ventures is basically our ventures arm, which has a lot of, in a way, you can see there are a lot of startup companies under RBC, which are owned by RBC, but they do very different kind of work, right? One such startup is actually working primarily on this, right, where they help newer companies start up, basically, right, get pretty much off the ground. So I can Google it up and maybe share it later, but yes, there is a tool which is available which can help them set foot here. And again, this is again a bit of, this is actually a part of my current role. So in case the agent, the kind of people that you're talking about, in case they are big in their home countries, so let's say in India they have a very established business and they want to establish a new subsidiary in let's say Canada, then the best route for that is approach their bank if they have an international collaboration with a partner bank. So let's say RBC, we partner with ICICI Bank in India, right? So if any of my clients, they want to move to India and they want to set up a business there, then I will go to ICICI and help them collaborate with them and set up a bank account in India and basically get started there, right? So because getting a foreign bank account, it's not a cakewalk, it's a hard process. So in my current role, in fact, I maintain relationships with banks across the globe. So we help our clients in countries like Australia, UK, India, China, Hong Kong, everywhere. In case they want bank accounts there, we work with our partnerships and try to help our clients.
Okay, thank you. Great to know about that. We have like a few more questions.
Yeah, let's take this.
Yeah, we'll take a look at that.
Okay, are there insurance give product liability insurance? I'm not sure if I understand the question. If you can, but they can speak, right? Kavitaji?
Will they be able to? Kushagraji, there's a question.
Yeah, so if Praveenji can clarify that question, I'm assuming it's in regards to product liability insurance.
Yeah,
it is. Please unmute yourself, Praveenji, before you ask.
Yeah, hi. My question is, my product gets installed inside the cars. And in case there is a accident or a fire and the cause is attributed to my product, then the liability runs into a few millions.
Right.
And I've been trying to figure out with a lot of companies in Canada, and so far
Okay.
I have no success.
So you basically want an insurance company which can insure you against something like that, right? That's
Yes, yes, yes.
okay. Okay, sorry, Praveenji, I don't have information for that, but I can definitely dig that, and maybe I can get your contact details to Kushagra and flip you some resources on that.
Wonderful, thank you.
And let me read Nareshji's question. If Canadian exporter not able to give its payment in any unusual condition, there is any kind of insurance, limited particular trade or this insurance. Okay, so Nareshji, EDC does give a lot of different kind of insurances, and they do have. Parveenji again, and maybe it relates to you as well. EDC, I don't know if you have explored EDC, but I think you are actually in a reverse condition where you are manufacturing somewhere and you're getting the product into Canada, right? In that case, actually, EDC won't be helpful. But had it been the other way around, if you were manufacturing in Canada and exporting, then EDC could have actually been able to help. But anyway, let's read Nareshji's question. So Nareshji, it's EDC does insure, and EDC basically partners with banks. So they do not directly insure you. They do not insure your payments. They work the other way around. So let's say you are an exporter and you are basically sending goods out. In case you do not get paid, EDC can come into play and help you get paid, right? So you can insure your receivables using EDC. EDC does that. Okay.
There's another question.
Is there any other question? Open questions. Okay, let's see. No, I didn't see anything else. Do you see anything else, Kavitaji?
It just popped up and just disappeared. So
Okay.
again, it was
Okay.
Nareshji's question. Nareshji, why don't you come online and ask it directly?
No, Nareshji's question, I think I answered, and like I think he's happy with the answer. So
Okay.
I have a question in regards to trading with the US. All right. We talked about how the practices differ with the US, because of its proximity, the high amount of trade that happens with the US. And then you talked about how trade differs rest of the world. Are there any other examples that, where Canada has a special trade relation with? So for example, maybe Europe, the UK,
yes,
and how that differs?
So Canada has a lot of these trade partnerships across the globe. And the other one, and I used to be good at those because I was doing that earlier, but I believe it's called CETA, if I'm not wrong. It's basically Canada and Europe Trade Association, trade agreement, and there are a lot of changes which have happened in that. But Canada does get special privileges in European market as well. So similarly, so obviously there is US, Mexico, and Canada is one group. So obviously you have privileges here, but Canada also has special arrangements in Europe, and they keep working on those international agreements and arrangements where they get special privileges internationally. So that is very sort of a fluid situation, Kushagra. It keeps changing, but Europe and Americas, yes, for sure, they've historically had very good relationships.
One last question. We've seen in the news a lot of talk about BRICS floating their own currency to be used as a trading currency. And there's potential news about the dollar being devalued or dekinged as the go-to trade. Do you want to comment on that? Anything, insights you can give that will happen?
Yeah, so I mean, first of all, if something like that happens, I would say it's good overall, because then you are reducing your dependency on US dollar. So right now, if you consider international trade, and I don't know the exact stats as of today, but historically 90% of the trade has happened in US dollars. Rest of the currencies make just 10% globally. 90% trade, even today we see the Canadian businesses, they are manufacturing, they are exporting, but a lot of their business actually happens in US dollars, right? It's not Canadian dollars, it's US dollars, because globally people are much more willing to accept or trade in US dollars because it's such a freely available currency across the globe, right? So firstly, it's great if something like that can happen, although it's a very challenging situation. The same thing was happening when Chinese yuan was kind of gaining a lot of prominence, let's say some 10 years back. That is the first time when China kind of started opening up a little bit. They started opening RMB accounts globally in different places. Otherwise, there was the only way to get an RMB account was within China. You could not get an account in that currency outside outside China. So they started promoting it, and all of a sudden, I was working with HSBC at that time, so I remember those because HSBC was the first bank to offer that account in India. So there was a lot of noise around it that, okay, this is going to change everything because now Chinese yuan or RMB is available. So everybody will start trading in that because China is the largest trading country. Nothing happened. Nothing happened. Absolutely nothing happened. There was a lot of noise for a lot of time, but no, it was a big dud. So I don't know if that will actually eventually materialize, but overall, I think it's fantastic if something like that were to happen because it reduces your dependency on a single currency significantly.
Okay. Any other questions? I don't see any other questions. I think it's time for us to wrap up this first session. Thank you very much, Vipin ji. Have a good summer. Enjoy your summer with your family. And thank you so much. We hope to see you soon. We have like a lot of programs coming up this year. And the 2023 Board of Directors are super excited to come up with something unique all the time. So it was really wonderful having you on board. And thank you so much for throwing light on the subjects. I'm sure we will certainly have some more questions which will be directed to you through Naresh ji or Maharshi ji or Kusharji ji. Thank you very much for your time. We will certainly come up with another session next month. Please stay tuned. Thank you. Shubh Ratri.
Thank you, everyone. Shubh Ratri.